When the central banks experience panic and resort to printing money again, the resurgence of inflation becomes inevitable. Historical evidence demonstrates that no country has maintained its dominance indefinitely. Typically, nations reach their peak and eventually enter a phase of decline. Regrettably, one of the recurring issues with history is that people often fail to learn its lessons. Recently, we had a president who displayed a lack of historical knowledge. He even claimed to be smarter than history itself. Unlike him, I humbly acknowledge that I am not more intelligent than the lessons of history. And history is crystal clear on this matter. No nation, and sometimes its currency as well, has ever sustained its position at the top indefinitely. Presently, America finds itself as the largest debtor nation in recorded history. Our military presence extends across more than 100 countries. There are those who argue that we have overextended ourselves financially, economically, and militarily. Their concerns seem to hold merit. Therefore, it is only natural to worry if we aspire to learn and thrive. History teaches us that if we fail to heed its lessons, we are destined to repeat the same mistakes. Rather than fearing or avoiding history, we should strive to comprehend and leverage it. Historical patterns demonstrate that no nation has remained at the zenith of power for more than a century or two, before eventually succumbing to decline. In this video, I delve into the two assets that Jim Rogers, a renowned advisor, suggests investing in. By studying and applying the insights garnered from history, we can position ourselves for success, avoiding the pitfalls of the past. Amidst this period of economic downturn, with a staggering net worth of $300 million, Jim Rogers stands as a Singapore-based American investor and financial analyst. He holds the esteemed positions of chairman and co-founder of Soros Fund Management and the Quantum Fund. Rogers gained prominence through his collaborative efforts with George Soros in launching the Quantum Fund, a venture marked by exceptional financial insights. Today, he aims to share his wealth of knowledge, quick wit, and endless charisma with you. The current circumstances in America do not bode well for the younger generation. The magnitude of what they are set to inherit is truly mind-boggling. As a person who is getting older, it brings me some relief that I won't have to shoulder the burden of paying for all of this. I reap the benefits, while the younger ones face the consequences. It's a concerning situation, as the country is borrowing and spending recklessly. Though it may benefit elder folks now in the short term, it doesn't bode well for the future. Looking back 100 years, Britain held the distinction of being the wealthiest and most powerful nation, with no other country coming close. However, within a span of 50 years, they faced bankruptcy. The IMF had to intervene to rescue them. This pattern of events has occurred before and often leads to the very issues we are discussing. While I don't believe it will happen in 2001, 2021, or even 2023, it is undoubtedly on the horizon. Based on my experience and observations, excessive money printing will have consequences. Building infrastructure or factories takes time, but with a few clicks online, one can accumulate unlimited amounts of anything. This surge in available money has caused financial assets to flourish. However, history shows us that such trends are not sustainable. Yet some argue that maybe this time will be different. Presently, America holds the dubious distinction of being the most indebted nation in history, as per the Bureau of Economic Analysis' latest estimate of the country's net international investment position, or IIP, at the end of 2020. Americans own a staggering $14 trillion more than what the rest of the world owes to America. Reflecting on history, we see that Britain, once the epitome of prosperity and development in the 19th century, faced a severe famine, as did Ireland during that same era. Real GDP per person quadrupled between 1780 and 1870, reaching $3,263 per person. Inflation tends to occur when the government prints more money. As discussed earlier, property and many stocks have experienced surges, but one area that remains relatively affordable is real assets. The price of sugar, for instance, has declined by 70% from its all-time high, suggesting that it is not caught in a speculative bubble. Similarly, silver has experienced a 70% drop from its peak. These are not signs of a bubble, but rather indicators of deflation. Inflation will escalate if the money supply grows faster than the national economy. This year, the S&P 500 has lost 17% of its value, while the tech-heavy NASDAQ has plummeted by over 30%, signaling a bear market. In an interview with CBS News, Janet Yellen, the 15th chair of the Federal Reserve, or the Fed, expressed her concern about inflation, acknowledging its colossal impact on Americans. Notably, Yellen oversaw a program to sell mortgage and treasury bonds that the Fed had purchased to stimulate the economy. Throughout her tenure, she maintained low interest rates while witnessing a rise in employment and wages. Since the 2008 financial crisis, global debt has skyrocketed to astronomical levels. It is my belief that the next crisis will be the most severe in our lifetime, considering the ever-increasing debt. One might think this is an exaggeration, but the evidence is clear when one looks out the window. The debt continues to rise each day. I have witnessed the consequences firsthand in 2008, and I expect the next downturn to be even worse. While hyperinflation, similar to Venezuela's case, may not occur rapidly in the U.S., there is a real possibility of serious inflation, a decline in the standard of living, and a devaluation of the currency. History has repeatedly shown us that these are the inevitable outcomes. The financial crisis of 2008 was primarily caused by cheap credit and loose lending rules, resulting in a housing bubble. When that bubble burst, numerous individuals lost their homes and jobs, leading to the Great Recession. It is important to compare major currencies such as the dollar and the British pound. In 2022, the dollar experienced an increase of over 10%, reaching levels not seen since 2002. However, if the Federal Reserve changes its aggressive rate hike strategy, the dollar would likely decline. On the other hand, the British pound has plummeted by 80% against the US dollar. This decline reflects concerns about having a currency tied to a single country. The European Union has even considered terminating its monetary union and potentially introducing parallel currencies for its member states. If you believe that your job provides permanent security and shields you from the effects of an economic downturn, you might soon find yourself seeking higher salaries to compensate for anticipated inflation. However, keep in mind that the natural rate of unemployment could nullify this increase in employment costs. While most people suffer during crises, there are always those who emerge in a better position than before. We've seen examples of wealthy individuals profiting during the collapse of Germany in the 1920s and the Great Depression in America during the 1930s. Although the majority didn't fare as well, if you make the right choices, you can thrive. Personally, I invest in silver and gold, and I plan to increase my holdings in the future. I may not have the best timing, but I firmly believe that both assets will skyrocket. Despite Mrs. Yellen and Mr. Powell's assurance that gold and silver are unnecessary, as an old peasant, I know better. In times of collapse, gold and silver provide a measure of security. They won't solve all your problems, but they can certainly offer some assistance. Therefore, I continue to invest in both metals. Additionally, I diversify my portfolio by investing in commodity indexes. If commodity prices rise, it is a clear sign of inflation. For instance, the price of rice has gone up, indicating inflation. Consequently, I hold rice and other agricultural commodities as part of my portfolio. At present, bonds appear to be in a bubble worldwide. Never before in history have bonds reached such elevated levels. Therefore, unless there is a special circumstance, I would be cautious about investing in bonds. The 1930s were a challenging time for the average American. The stock market crashed in 1929 and experienced subsequent declines. However, even during those tough times, it was possible to make money and to safeguard one's wealth by investing in inflation-proof assets such as commodities and real estate. Commodities like gold and silver often thrive during periods of inflation, making them suitable additions to an investment portfolio seeking protection against inflation. Stocks and bonds do not consistently outperform commodities when inflation rates are high, although they do tend to fare better when inflation decreases. Real estate is another avenue to consider as rental prices tend to increase alongside real estate inflation, thereby boosting cash flow for property owners. With rising prices and interest rates, the demand for rentals is projected to rise. Carl Icahn, a notable figure in the investment world, serves as an example of someone who navigated the economic crisis skillfully. Icahn sold 3 homes in 2007, earning nearly $1.3 billion, more than double his initial investment. During the economic downturn, he acquired the bankrupt Fontainebleau property in Las Vegas for approximately $155 million. Eventually, he sold the unfinished complex for over $600 million in 2017. Again, more than double his initial investment. Icahn's success can be attributed to his boldness, adaptability, and value investment philosophy. He invests in businesses that are undervalued and disregarded by others. Remember, no investment strategy is foolproof, and the market can be unpredictable. However, by learning from the successes and failures of others, we can all enhance our financial knowledge and increase our chances of building a palatable net worth. In my next video, I will delve into the specific steps you need to know for investing in safe assets. This valuable information will empower you to grow your wealth and alleviate the stress of worrying about everyday expenses. We are a diverse community, united by our shared goal of financial prosperity. Together, we can learn from one another's accomplishments and failures, pooling our collective wisdom for greater success. So make sure to subscribe and turn on the notifications bell to join me in the journey towards a stronger, richer, and more prosperous future. Thank you for watching.